Let's continue doing questions for ACCA book. The question 5 is about again accruals. Here the business compliant, it is financial statements for the year 31 July each year, pays rent quarterly in advance January 1, April 1, July 1, October 1 each year. The annual rent was increased from $60,000 to $72,000 from October 1st October 2003. We did the similar questions. I mean, the question 2 in this is the similar one. The question is, what figure should appear for rent expense in business statements of profit or loss? I mean, income statements. Other comprehensive income statements for the year ended 31 July 2004. Now look at that one. From August to September. From how many months we have? August to September, 2 months, because after that the rent will be increased. So that will be just $60,000. We have 2 over 12, that means $10,000 coming from here. Then from October, beginning from October to July, because it is the end of the period is July 31. So that will be, but at that time the rent is already increased per year $72,000 over multiply 10 months. From October, November, right, December, then till July, including July. So that will be 10 months, 7 from the new year, and after 2004, then it will be how much? $60,000. So the question will be rent expense for the business statement July 31. It's asking July 31. 2000x4, so 6,000 plus 10,000, answer is B. Right, now let's move another one. I'm leaving the some of the questions for you to do. Alright, and now I will move this question. In this question, limited liability company paid a total $60,000 again rent covering the period from 1 October 2000x3 to 31 March 2000x5. What figures should appear in the company's financial statements for the year December 1 as 31 December 2000x4? So in the income statements and the balance sheets, statement of financial positions. So in the statement of financial positions, let me write under this. So we have how much? $60,000, right? Rent, paid rent, which is covered from October 1, 2000x3, 31 March x5. So if you do a timeline like that, so from October 1, but this is x3 till December, right, 2000x3, but this is also beginning what? 2000x4 January, then it is December 2000x4, but it's also beginning what? January 2000x5 till when? March. How many months here? This is here till March 2000x5. If you put the number of months here, we have here 3 months. Here we have 15, and here 3 more. It means that this is $60,000 actually paid for 18 months. So if you divide this $60,000 for 18 months, right? $60,000. So $60,000 over 18 months. So each month is $3,000, rounding is $3,333. In this case, for this period, I mean, how much rent expenses will appear? $60,000, or you can say that how many months? because this is 2000 x4. It means 12 months. So divide this by 18, then multiply by 12. I mean, we find that is 3,333 and 12. That is, if you run it about, multiply it by 12, so that means that 40,000. So our answer is A or B, not C or D. But we have 10,000 prepayment or 15,000 prepayment. Again, if you do that one, $60,000, which is here 3,300, again 18,000, right? But we have how much we paid in advance for 2000X5. I mean this period, we paid in advance this period, 3 months, right? 3 months. So if you multiply it by that, you get $10,000. $10,000 prepayment. I mean asset. It is like a prepayment rent, right? So answer is A. Let's do one more question and finish from ACCA. The last questions, almost last question, 10, 13. So here is a question is about if you omit adjustment entries, what might happen? In this question, Buster draft financial statements for the year 31, 2000X5 rent report a loss 1,486. So we can say that loss we have in the 486 in bracket means minus. Now, when they prepared the financial statements, Buster did not include an accrual. Accrual means that the expenses incurred and it is forbidden. I mean, forgot. So expenses incurred, right? Expenses. Then accruals is also increased. If you omit this one, it means your expenses will be understated and your income will be overstated. And here we have losses already. It means that losses is understated, right? It means that we have to increase the losses. We omit this one, so we have to add this as expenses as well. So this is like a whatever it is. I don't know. Maybe rent. Maybe I don't know. 1,625. So our losses increase, but we have a prepayment of 834. What does it mean? That we did receive advance payment from the customer to do services, and we earn it already, this 834. Then we should reduce this unearned revenue. It means that we should increase our revenue should be increased by 834. So if you omit this, your net income will be understated. So that means that you have to add this $834 to your net income. So in order to correct your net income. So in this case, we can say that unearned revenue or revenue, right, increase. That is $834. So if you do that one, right, we have 1,486 plus, this is loss, 1,625. We have that much loss, but we have earned this revenue. So this Buster also forgot to do these adjustment entries. If you reduce this 834 earned revenue already, from the total loss, so it means actual loss is what? $2,277. So question B. The answer is B. Thank you for watching.